All right, let's talk Crane NXT, ticker CXT. On the surface, their Q3 earnings report looked pretty solid, but the market, well, it had a totally different take and it wasn't a good one. So we're going to dig in and figure out what's really going on here.
And this is the big puzzle, right? You've got a beat on revenue, a beat on earnings per share. I mean, everything you'd want to see. And yet the stock dropped 6% after the announcement. What in the world did Wall Street see that made them hit the sell button so hard?
So here's our game plan for today. First, we'll tackle that paradox, the beat versus the drop. Then we'll dive deep into the Q3 numbers, explore the two competing stories that are really driving this stock, and after all that, I'll give you our official rating and a potential trade idea.
Okay, let's get right into it. Part 1, unpacking those mixed signals, the good-looking results that crashed right into a really negative market reaction.
So let's start with the headline numbers. Adjusted earnings per share came in at $1.28. That's a nice little 2% beat over what the analysts were expecting. And revenue? Over $445 million, cruising past the consensus by almost 4%. I mean, you look at this table and you're thinking, great, this is a clear win.
But then you see this, negative 6%. As soon as people started digging into the full report and listening to the earnings call, boom, the stock sold off. So clearly the market's eyes were fixed on something else entirely, something hidden behind those nice headline beats.
And to figure out that reaction, we've got to pop the hood and see what's really going on with the engine. The details of the quarter, the numbers behind the numbers, are where this whole story starts to actually make sense.
Now, at first glance, this is awesome. Over 10% sales growth year over year. But, and this is a big but, look at where it really came from. A whopping 7% of that was just from buying another company. Another 2%, that's just currency fluctuations working in their favor. So the real, organic, core growth of the business itself, it's that tiny little slice right there, just 1.4%. Suddenly, not so impressive, is it?
And when you split the company in two, it gets even more interesting. It's like a tale of two businesses. You've got the security and authentication side, we'll call it SAT, which is on fire, up over 28%, fueled by that acquisition. But then you have the other half, Crane Payment Innovations, or CPI, which is actually going backward, down almost 4%, a huge divergence.
Okay, but here's a really bright spot, 115%. What is that? It's their free cash flow conversion. In simple terms, for every dollar of profit they report, they are generating $1.15 in actual cash. This thing is an absolute cash machine. So even with one part of the business struggling, the overall financial health is, frankly, fantastic.
And all of this brings us to the core of the issue. You've basically got two completely different stories fighting for control of the narrative. There's the story management is telling, the long-term strategic one. And then there's the story the market is reacting to, all about the short-term headwinds.
And you can hear it right from the CEO, Aaron Saak. He's framing this as a success. He's saying, hey, we had a solid quarter. He's pointing to the growth in their key SAT segment, the good margins they're still getting from the weaker CPI side, and of course, that powerful free cash flow. He is playing the long game here, focused on the big picture transformation.
This slide right here just sums up the whole fight. On one side, you have the bulls. That's management saying, look at our smart acquisitions. Look at the growth in our most important segment. Look at our huge backlog. But on the other side, the bears, that's the market right now, are saying, yeah, but you trimmed your guidance, your other business is shrinking, and the economy looks shaky. It's the exact same report, just viewed through two totally different lenses.
And this timeline is really the bull case in action. This isn't just talk. Look at the moves they're making. They closed one big deal, they announced another massive one with Antares Vision, and they have this huge built-in catalyst coming up with the new US $10 bill. They are actively building a different, higher growth company right before our very eyes.
So you've got the bull case, you've got the bear case. Where do we land in this whole debate? Well, after looking at everything, it's time for us to make the call. We are rating Crane NXT outperform. Simple as that. We believe the market's negative reaction is short-sighted, and frankly, it creates an opportunity for anyone who buys into management's long-term vision.
So why do we think that? Well, it boils down to 4 key points. First, dropping the stock 6% because they tweak guidance just a little bit, that feels like a massive overreaction. Second, this Antares Vision deal is a potential game changer, and we just don't think that value is priced in yet. Third, you've got this slow and steady tailwind of countries updating their cash. That's their bread and butter. And finally, with all that cash they're generating, that's your safety net. It gives them a ton of flexibility.
Okay, so if you agree with that outperform rating, you're probably asking, so what's the play? Let's walk through a potential trade idea based on this thesis.
So here's the thought. You could use this dip as an entry point. Maybe start a position somewhere around $61 a share. We've got a price target of $75 over the next year, which we think is totally reasonable as the market wakes up to the M&A story. Now, what's the risk? You got to keep your eye on that CPI payments business. If that weakness continues, it could be a headwind. But the big prize, the next major catalyst to watch for, is when that Antares Vision deal officially closes. We think that's when you could see this stock get a significant re-rating.
And of course, the important note we always have to make, this is not financial advice. This analysis is for informational purposes only, so please always do your own research.